XRP is now fighting to stay above $2.90, and a top analyst says the story is far from over. According to EGRAG Crypto, XRP is not just aiming for $4, but could potentially rise as high as $27 in this market cycle. And here's the key. XRP is about to close its first ever 2-month candle above $2, a technical event that could set the stage for one of its most historic rallies. So let's break this down. Recently, another analyst, Crypto Rover, predicted that XRP's peak this cycle could be around $3.20 to $4.80. That sounds modest, just a 10% to 65% gain from where we are now. But EGRAG completely rejects this idea. In his own words, XRP did not spend 72 2-month bars, or 4,383 days persevering, only to end up at a meager top of $4.13. His argument is clear. The market has not endured years of waiting just for XRP to move a little and then collapse again. Now, here's why this matters. XRP is about to close its July to August 2025 candle above $2. And if it holds, this would be its highest 2-month candle close in history. For technical traders, this is not a small detail. It signals strength at a time when many expected weakness. Let's talk about the upside targets. According to EGRAG, XRP's rally has 4 major levels based on Fibonacci extensions. The first target is $3.31, which was the all-time high from January 2021. XRP already passed this earlier in July when it hit $3.66. Reclaiming this level again would bring XRP back into breakout territory. The second target is $8.37, based on the Fibonacci 1.272 extension. If this plays out, it would represent a 188% increase from today's price and mark a brand new all-time high. The third target is even bigger, $13.56 at the Fibonacci 1.414 extension. That's a 367% increase from now and would put XRP into double digits for the first time in its history. But EGRAG doesn't stop there. He has consistently argued that the real cycle top could reach $27.17, based on the Fibonacci 1.618 extension. He has repeated this target since December, and he's standing firm on it. Of course, he also warns that after this potential peak, XRP could crash as low as 80 cents, which will be painful for late investors. Now, here's the critical question. Is this realistic? On the one hand, history shows XRP is capable of dramatic rallies. Back in 2017, it climbed from under 1 cent to over $3 in less than a year. That's a massive return. If similar momentum returns, then $8 or even $13 doesn't sound impossible. But $27? That would require a market cap in the trillions, pushing XRP far beyond its previous role in the market. Another layer to this debate is the psychology of investors. Crypto Rover's conservative range of $3.20 to $4.80 might sound disappointing, but it's also more grounded in current market conditions. If XRP can close this candle above $2, it will give bulls fresh confidence. But confidence alone does not create trillions of dollars in liquidity. Still, what makes EGRAG's case interesting is the technical backdrop. He points out that XRP's structure suggests accumulation, not exhaustion. This means, according to him, the token is preparing for expansion, not collapse. So what should investors take from this? First, do not underestimate technical milestones. The fact that XRP is closing its highest 2-month candle ever above $2 is significant, no matter how skeptical you are. Second, remember that predictions like $27 are ambitious, and even EGRAG admits a sharp correction could follow. And third, look at the difference in narratives. Crypto Rover sets a safe expectation, while EGRAG keeps the dream alive for a massive breakout. Between the two, the truth might lie somewhere in the middle. XRP may break $8 or even touch $13, but $27 would need unprecedented conditions. In the end, the key is balance. XRP holders should celebrate technical wins, like this 2-month candle, while also staying realistic about what the market can actually deliver. Because whether it's $4, $8, or even $27, the only thing certain is that XRP is once again at the center of one of crypto's biggest debates.